Hello guys, it's Amphyfx here. So today I'm going to be talking about engineered liquidity. Basically, liquidity is what flow of money or where there is money in the market. That's the basic terminology of liquidity. So many of you would have been taking trades where you get stopped out before the big moves happen. Now this is the concept of liquidity. So if you stick to the end of this video, I'm going to explain and show you what an engineered liquidity is all about. So guys, so what is engineered liquidity? Engineered liquidity mostly market needs what buyers and sellers to move the market. So if the market do not have buyers or sellers, there will not be movement in the market. So that's what basic concept of liquidity. People are buying and people are selling. So big players do not have enough people to trade against. So what do? They create what we call liquidity. Flow of money, where there is money is like a trap. I getting it. So how does this happen? They do this by pushing price up or down to areas where traders have their stop losses or pending orders. Let's say for example, there is what you see a support, a resistance level, or price break above a resistance level. Let me price break above a resistance level. Price did something like this. Now many traders will take their buy entry from here at this resistance level. Then price will do something like this, and eventually price will reverse sharply. Take all their stop losses sitting below this zone and then begin to go up again. That's what we call engineered liquidity, right? This is not random. It's not something random. It is how institutions or the big guys or the smart monies feel their large orders because they are trading with large amount of money. They have huge positions, so they need to take out many traders before to get their order fills. If there's to dump all their money into the market it will cause distortion in the market. In fact, they'll be buying very expensive, so they need liquidity to reduce their slippage and their fees that they'll be using to enter the market. So that's the essence of liquidity. So what do smart traders do? Smart traders like you and I, that's smart. The traders that trade SMC, smart concepts. We are we wait for these liquidity grabs before we enter trades. That's why you often see stop ones before the real moves happen. It's because of Because of this engineered liquidity. Now let me explain further. Let's say for example, you see market do something like this. Normally, there are basic structures of market. Market moves either uptrend or downtrend. But let's say market is doing what? Series of lower lows, lower highs, lower lows, lower highs, and then lower low. And then market did something like this. Why do you think market did something like this? Now let's say this is my order block, right? On now market has to be breaking structure to the downside, break of structure, giving us series of lower lows, lower highs, lower lows, lower highs, right? As a normal trader or as an SMC trader, you are patiently waiting for to market to come back to your OB or your POI, right? So market has to if market breaks structure, market has to come back to the origin that give rise to that break of structure, and that origin will be your either your FVG or your other block, right? So as a trader, when you see market break structure and it's reversing reversing back to your other block or your points of interest, and you see something like this happen, it is not a mistake, or it's not a mistake in the market. No, it was purposely created to create FOMO. There is what we call FOMO. So this zone was created to to create FOMO. There are traders or the retail traders who do not understand this concept. They'll think maybe market did not market is about to reverse down to create a new lower low. because markets is not what is not going to come back to this my OB. Since markets have reversed, many of them now what jump into this what into this trade, creating this what this sell pressure, this small tiny pressure to the downside. So these guys, these smart monies or the smart traders will now jump in, dump their money, create what? Take out all these guys, all their stop losses below this zone. If I should enter here, I'll have my stop loss sitting here, right? I'll have my stop loss here, expecting market to come to create a new lower low, right? So what did you see happen? But instead, after creating this FOMO, these retail traders will jump on. But then what do you see big traders did? The smart money did. They what came back, take out their SLs before what creating the big moves or the actual movement of the market. That's the essence of what engineered liquidity. If there is no what, if there is no inducement, there is what we call inducement. Inducement is also like just like the name implies, inducement is just to induce traders to create what? To create FOMO. So now let's go to a real life chart. What do you see market did here? Just have a look at this. Market was giving us what? Markets failed to what? To break this high. Normally market was creating series of higher lows, lower highs, lower lows, lower highs, lower lows, lower highs to the downside, right? But then markets shifted direction to the upside, right? By breaking this what recent high. Normally you were supposed to like see something like this, right? Lower low, this lower low here, and then a higher high. But what do you see happen? Market failed to what? To create a new higher high above this recent structural high. And what do you see happen? Market was shifted direction to give us what? A downtrend, breaking what? The recent structure to the downside. You can see this break of structure to the downside, breaking the structure to the downside. And after a break of structure, what are you anticipating? You wait for what? Market to come back to the origin that gave rise to that break of structure. So that's for me. I am more of an OB trader. That's the other block. So I'll mark out my other block. Patiently wait for market to create an inducement or a form of liquidity or engineered liquidity. So this zone here was engineered, creating what? FOMO, because people would think maybe the market will not come back to tap into this what? Into this my OB here. People now begin to short from this area and place their what? Stop losses just above or below it, above it. And what do you see happen? Market came back, took them out of the what? Of the market before tapping into my other block. As an SMC trader, I have to what? Wait patiently for market to tap into this my OB before I will take my position and go in line with the trend. So the FOMO, the guys, the retail traders do not understand this, and they'll be like, market took them out before market makes the real move. That's the essence of what? Essence of engineered liquidity. So guys, if you learn something from this video, don't forget to hit the like button and subscribe to my YouTube channel and turn on the notification for more video like this. I'll see you in my next video, guys. Thank you for watching. Peace out.